Okay, so we have a query here. For a cycle analysis like the one you presented in the last slide, I did not get the query, Julian. Can you be more specific? Okay, you are asking me. Okay, see, the idea is that I look at two indicators, because for me most indicators are talking about time. So for me, I am not in the conventional thought that I should look at stochastic in some way and MACD in some way. I limit my cycle study to RSI and rate of change. I have not used MACD and stochastic for a long time. I have rarely used CCI. But for me, the idea is to understand time. So sometime rate of change does not tell me, because rate of change is a non-banded indicator. It moves up and moves down. And RSI is a banded indicator. It moves between a certain band. So one side I look at non-banded indicators to understand time, and on the other side I look at a banded indicator to understand time. So I only use RSI and rate of change to see cycles, to see the time, or to understand the time. So one could do it with CCI, one could do it with stochastics, but the whole idea is that too much noise indicator may not help you. So if you look at a fast stochastics, you may not be able to see the time element very well. But if you use a slow stochastic, you may be able to use it. Like I think CCI could be very useful, because CCI is not a very fast indicator. That's my interpretation. But I think it could be tried on CCI. Maybe I will have a look at it and see. So does it answer your your query? Okay, yes. So another query we have here is, what's my opinion on Proctor's view of the doom coming? Proctor and I am uh, are on the two sides. Proctor, I have high respect for him, and he has written many books. We have read those books, and I have learned a lot from those books. I recently we keep writing about some of his thoughts, but the idea is that when Proctor talks about social mood being the driver of society, Orpheus and Mukul Pal disagrees, because we are not saying social mood drives. So Proctor says social mood drives everything, and I'm saying no, time drives everything. So we have a different opinion. And about the doom coming, I just told you that I am looking at a 10-year low already being formed in March 2009. So I am looking at a 1.5 year 15-month of further upside. So I am really talking about the doom Proctor is talking about sometime after 2012. So 2012, 2013, maybe 2014 is when I am really expecting the next crash. So I'm next few years I'm really looking at a positive up move. So 400 Dow, Robert Proctor's view, I don't see it happening in by 2012. So that is one of my disagreements with Proctor. Second, disagreement is that he talks about like deflation, and I am talking about inflation. So that's another point of view where we don't talk the same thing. And the third view is that he says social moves drive everything, and I'm saying time drives everything. So we have, though I have an extreme respect for him, but I disagree with Proctor on many things. So does that answer your query? Okay, so we have another one here, which is that um, what time cycle says when price is going up but MACD going lower or making lower turf. Okay, so when price is going up and MACD is going lower, it depends on what time of MACD you are doing. If you are looking at daily MACD, it may behave in a different way. When you look at weekly MACD, it may behave in a different way. When you look at a monthly MACD, it may talk something else. So when, if you are asking me what does time say, I would integrate or look at daily, what does daily say, what does weekly say, and what does monthly say. So if daily is going down, then I say yes, price is going up and daily is falling, so smaller prices are not listening to smaller time. Then I will go on the weekly and I may understand why prices are not falling, because weekly MACD or the weekly time or the larger time may still be up. And if the weekly is also down, then I understand the daily time negativity indicated by daily MACD is confirming that the negativity on prices should come. So does that answer your query? Okay, so we have another one here which says, please, what's your opinion about divergences? How can we find the better picks that will change the trend? Actually, that's a very interesting query. Um, See, in our work, uh, we have realized that daily non-confirmations are very weak, because there are so many daily non-confirmation that fail. So if I have to really look at a serious non-confirmation, I do not look at a daily non-confirmation. Maybe I'm not a day trader, so if I'm a day trader, then daily non-confirmations may mean a lot for me. But what I'm trying to say is that for non-confirmations also, I look at multiple time non-confirmation. I rarely see monthly non-confirmation because they don't happen every day. But if there is a monthly non-confirmation, I am very sure of a trend. If I am a weekly non-confirmation, I see a reasonable trading structure. But if I have a daily non-confirmation, I'm almost discounting it already. So I really do not. I consider daily non-confirmation as a noise. So does that answer your query? Okay, so we have another one here, which is by Aline. Sanape, for example, how did you put the lows and highs start at the end of a cycle, because they are not the same as highs and lows, and price also is different from the cycle based on RSI. I'll have to look at that specific example. What I did was I tried to look at uh, lows. Because cycles, when they are drawn on time cycle on a visual chart, it is said that one should look at lows, because lows in time are more serious than the highs in time, because of the translation effect. Translation is the bias, because if there is a larger time up, then there is a smaller time may not exactly top in the center of the triangle. If the larger triangle is up, the smaller triangle will see shifting, will see a shift, and that's called a translation. So that is why time cycles should be drawn with lows. So I have just tried to visually look at the lows, and I have tried to put some cycles, but these are very crude ways of drawing cycles, because cycles are should be done with integrated indicators many times, and the process of cyclicality that we follow, we look at, like I told you, like larger trends. And so what this is done on a short term time frame may not look very clear, but this is a more of an exercise to visually train your eyes, rather than being so sure that the cycle works. Because once you visually train yourself, only then you can identify. Sometimes it may look like noise, this is noise, this is not so exact, but the more you see again and again, you start seeing cycles. So does it answer your query? Okay, so we have another one here, and which is uh, okay, there is an observation that we should look at overbought prices of the market. Okay, yes, of course, we should look at overbought and oversold extremely carefully, because overbought and oversold are extremes. Extremes should always be paid attention to, And if you are a day trader, you should look at 3 degrees of extreme. If you are a larger degree trader, multiple week trader, try to look at extremes on 3 degrees: smaller, minor, intermediate, primary. When you have an extreme, it is telling you about time. So extremes are very important. So thanks for the observation. Uh, are the cycles in connection with Elliott waves? Of course. Ralph and Elliott was also a cyclist, a time cyclist. So if you read history of time cycles, you will see the Ralph and Elliott is mentioned in the history of cycles. I just did not put it here because we had another complete section on Ralph and Elliott, and if I put all the cycle work here, we may be talking about a few hours, because there have been so many people talking about cycles in the history of economic research. So Ralph and Elliott was a cyclist. So Elliott waves are cycles. No, so there is nothing. There are no two thoughts about it. Um, Okay, so we have another one. What is the mathematical calculation used by Plummer in finding correlation of 333 on time? He is using basic simple multiplication, and he was not the one to talk about 3.3. 3.3 is a Joseph Kitchen cycle. He saw an average cycle of 3 till 5 years with an average of 3.3 years. So Plummer basically said that what Kitchen is saying about 3.3, and what Juggler is saying about 10, and what Berry is saying about 30, and what William Strauss and Hoff is saying about 90 are all connected by 3. So it was a simple multiplication of 3, and that's where the mathematics came from. And what is your opinion about the new idea that coming system? This is a very large question for me to answer. According to me, the credit crisis is far from over, and the society of the next 10 years will be a different society. How we understand money today will not be how we'll understand it 10 years from now. So inefficiencies will go out, and to understand efficiency, the simple thing you can do is understand time. Okay, so we have another one, which is, what do you think about, do you use range charts? If you're talking about range being range bound charts, I do not know what are range charts. I'm sorry. Okay, I do not know. Any other query that you have? Okay, we have another one. With rate of change in RSI, what periods do you use to identify the start and the end of a cycle? To daily. See, I use 14 default. I do not change my default numbers for rate of change in RSI. I'm a 14 believer. So 14 is all that I use. I do not try to, because my idea is not to fine tune the indicator. My idea, because whether it's 14 or it is 10 or it's 20, I have to see time. So I just use 14. That's how, what is my default period. 14 days, 14 weeks, 14 months. Range chart use volatility instead of time to plot price. No, I have no opinion about that. I'm sorry, I don't use them. Okay, so thank you very much, all of you, and for your time, and we will see you once again tomorrow at 6 o'clock. Okay, we have another one, which is, which oscillator is more useful. I already said it, that all oscillators are more about comfort, what you find comfort, where you can see is what you use. So there is nothing called one oscillator being more interesting than the other. It's about how your comfort is, So that is all. Okay, thank you very much.